and welcome to this week's edition of #Africa, where we bring you the latest from across the continent. I'm Ropiwa Madzena. We begin with this week's top stories from Africa. At least 5 people, including a military officer, have been killed in Sudan's capital following clashes between protesters and the military. Violence flared up in Khartoum after the military council and protest leaders announced they'd reached an agreement on a power-sharing deal for the country's transition. The council took over after an ousting of longtime President Omar al-Bashir. But protesters were unhappy, saying some of the generals were linked to Bashir's regime. Sudan's acting prosecutor also announced that Bashir would be charged with incitement and the killing of protesters. Demonstrations erupted in the country in December after the government increased bread prices. Moving to the east of Africa now, where final year secondary school exams have been cancelled in Somalia after papers were leaked on social media. The announcement was made by the country's education minister. Exams will now be written at the end of May. Social media will be shut down for a 5-day period in a bid to avert more leaks. And former Nigerian President Goodluck Jonathan has denied bribery allegations leveled against him by the federal government. The accusations are linked to a $1 billion oil deal signed 8 years ago. But in a statement, Jonathan called the allegations a recycled falsehood that is blatantly dishonest, cheap, and predictable. Businesses are warning that load shedding may worsen an already dire financial situation in Zimbabwe. The country's power utility introduced outages to avoid a complete collapse of the power grid as the country grapples with the drought affecting its largest hydro power plant. Zimbabwe also has aging infrastructure, further complicating matters. These are the worst outages in over 3 years. To discuss this further, we are joined by Managing Director at Busha Investments, Mr. Joseph Busha. Mr. Joseph, thank you so much for joining us this evening. Let's perhaps start with some context of the current economic climate and how these power outages have impacted on the situation.
So Zimbabwe is in a financial quagmire, so that's the first thing. So certainly, if a country has got financial problems and they don't have credit lines, it becomes very difficult for them to maintain any infrastructure or to do any new investments. So given the current economic environment that is already difficult, I think this can only worsen the matters and the issues. There's high unemployment, there's liquidity issues in Zimbabwe. So certainly this can only worsen an already bad situation in the country.
Yeah, but how does Zimbabwe then move forward from this particular situation? You've mentioned all those complications that the economy currently faces, but how do they begin to find alternative sources of power or to start fixing that aging infrastructure?
There are a couple of issues they really need to do. First, obviously, they need to make sure that they've got access to capital. And what you want is you need massive capital investment to be able to revitalize, to revive the current infrastructure, refurbish the current infrastructure, and invest in new infrastructure that is able to meet a growing population. And secondly, a rapid urbanization. So Zimbabwe, there's a lot of people who are moving into the urban areas who don't have electricity. So you want to be able not only to power the homes and the schools, but certainly to power the industries that allows them to be able to get employment. So we need to make sure that there are credit lines, there is production in the country. But one of the key issues is really the affordability by the government to be able to pay, to be able to pay back if it is international investors. If it is local investors, there's no way they're going to get their money.
Yeah, and I mean, I guess one of the raging questions here is who would be willing to invest in Zimbabwe's power sector at this stage in terms of those credit lines you speak of?
So there are a couple of options they have. Obviously, you mentioned earlier on in your intro that, the Kariba Dam hydropower station basically was one of our largest power producers. They're looking at other forms of power, including renewable energy, but that might take long to be able to produce enough power, the megawatts that are required to feed into the grid. There's also wind power, there is solar power. So there are different options, but possibly for Zimbabwe's case, that might be a little bit of a mid to long-term strategy for them to be able to phase in and look at all these other alternative sources of power. So currently there's also no fuel. Remember we need diesel to be able to use generators, at least to be able to assist, during outages like this. So they need to be able to restore or get credit lines, in terms of looking for international funders to come in and support them. We had a drought, which obviously made things worse for the dam. But, there are lots of issues from a farming perspective, food security, and this can only make things worse.
Yeah, and I mean, you've just mentioned key industries there, and I want to focus also on a big one for Zimbabwe, mining, and just the implications on the mining industry during this time of power uncertainty, for lack of a better term.
Well, if you look at here in South Africa, Impala and Anglo-Plat, they had massive losses during the first quarter of 2019, purely because they could not process or do any mining. So Impala, I think they were talking about 1.4 billion, for Amplas rather, and they had about 200 million they could not process purely because of the outages at the beginning of the year, and that impacted really, on the production of platinum in the sector and profitability of those companies. So mining is one of the biggest contributor of the GDP in Zimbabwe, one of the biggest employers as well in Zimbabwe. So certainly if there's no electricity, you can't either revive the mining sector, okay, or continue to produce the required production for companies to be able to meet their targets, to be able to export, for us to have to end the foreign currency. So I think it's a big blow not only to the mining, as I mentioned earlier on, it's a big blow to the agricultural sector, and also a big blow to the tourism industry, because I think Zimbabwe, those are the pillars, if you want to look in terms of the Zimbabwean economy, is agriculture, which must be the key focus, then mining, and certainly tourism.
And then just quickly, finally, an outlook on the inflation, given the new monetary policy that the central bank put forward. Your thoughts on that?
I hope we're not going to go back to 2008 when inflations were measuring in their millions. So currently, I think inflation has moved from about 4%, 5% some few 2 years ago to about 59 where it is. So you're not just in double digits, but you're really flirting with triple-digit numbers. The reason is prices going up. So after floating the Zimbabwean dollar, or what they call bond notes, or RTGS, you found that they pegged it to the US dollar at 2.5 to the dollar, but certainly it was also on a floating basis. And now the American dollar is trading as 1:5 RTGS, and that is actually caused people to raise prices. And now you're seeing people not just increasing prices once a month, or they might be increasing prices on a daily basis, and inflation certainly does not like that. So there will be must feed into inflation, and it might skyrocket again.
Bit of a grim outlook for Zimbabwe's economy at this stage. Mr. Busha, thank you very much for your time. I've been speaking there to Joseph Busha, who is the Managing Director at JM Busha Investments. When we return, coalitions and undecided voters as Malawi heads to the poll. You're watching #Africa.